Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, July 31st, 2019. We are now in the final hour of the trading day. As most of you know, I believe that the prices at the close of the day are the most valid prices because the market makers and large institutional financial firms move the prices at the end of the day. They're the ones in control of the prices, and I believe those closing prices are the most valid prices and therefore the best prices to make my buying and selling decisions from. So thank you for coming today. It's nice to see everybody. I appreciate you spending your time here. Hope you're going to learn something today. We have had quite the wild ride today. We had the Fed announcement. They cut rates by 0.25%. Didn't do much for a while, but then in the interview section, the market just fell off a cliff. It's recovered a bit. I think it was down over 400 points, like in a matter of seconds. I just saw my screen light up like a Christmas tree. All right. So let me just make sure everybody can see me. Hey, William, how you doing? Good to see you. Hey, I forgot to ask you what the name of your dog was. William sent me a beautiful picture of his Labradoodle or Golden Doodle. Looked more like a golden, right? I'm not sure, but I think he said Labradoodle. But what a beauty. What a beauty. So, all right. Looks like you can hear me okay. Thanks for coming, William. I appreciate it. Boy, have we had a ride, everybody. This is a ride. It's going to be interesting to see where everything closes. So the plan for today, first thing we're going to do, we're going to go ahead and run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at all my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. And I think there's going to be some managing going on today. At the end of the day, then we're going to do after that, we're going to do a quick segment on some trader psychology, and then we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at the technicals. We're going to look at RSI levels. We're going to look at MACD. We're going to look at ATR channels. We're going to look at moving averages. And if we're fortunate enough to find one at the end of the day, which has a confluence of signals, because to me, it's very important that you have a confluence of signals and not just one indicator. I mean, about the only indicator I'll take just by itself is a break under and a break back over the 200-day moving. But that depends. But that's about the only one. Ideally, I'd like to see at least 2, 3, 4 indicators lining up, which to me shows that there are different groups of buyers that would be coming in at a particular area. So, and then if we find something like that at the end of the day, we'll go ahead and enter a long position. But this is going to be interesting to see today how this closes. Very, very interesting. Yeah, this possibly could be a big trend change in the market for the foreseeable future. Who knows? I mean, I'm not making a prediction. It's just a possibility. Of course, we have to take each day on a case-by-case basis. And then after the market closes, if anybody has any questions whatsoever, please just let me know. I'll do my best to hopefully answer your question or to clarify. And if you want me to take a look at any of your particular stocks, I'd be happy to do that as well. So, all right, well, let's go ahead, run the legal disclaimer. We'll get that out of the way, and I'll be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, JT is here. Hey, good to see you, JT. Thank you for coming by. Hey, Mount Doji, happy Fed Day. Oh man, what a great present that I got for Fed Day. How about you guys? Excuse me. So, uh, the last Fed meeting, if you guys remember, I took off a bunch of positions because I was concerned about the volatility that often follows the Fed meetings. Well, um, last Fed meeting was a bit of a dud. Didn't do much, but if you learn anything from today, you can learn that the Fed meetings can have a huge impact on the market. I mean, when it first came out, it was pretty muted, but then in the interview section, boy, did it did it go down. So anyway, well, let's get to my positions and let's go through and see what is happening. All right, Russell 2000. I did buy Russell 2000 initially back here on the 28th of June. I bought it when the 10 EMA crossed over the 50 EMA. This is a mechanical trade, meaning that I'm just going to stay in the position as long as the 10 is over the 50. Just a mechanical trade, just a robot trade. No red flags, no discretion. So I did buy it here back on the 28th. I only bought a half of position, however, because it was outside of the channel. It had two big strong days up, and I believe, yeah, it had some resistance here. So I went ahead and bought half position, got out of about 25% of the position here. The very next day it gapped up, but then after that it came down, just moved sideways. There were several days where I did hit a profit target on the way up on the up moves, but when I take a half a position, it doesn't mean I'm always going to have a position. If I take a half a position because there's some strong momentum or a good signal, but I feel like I'm chasing a little bit, I'll wait and see if it pulls back in order to buy my second half of the position. And it's exactly what I did here. I added my second half of position on 723 when we had this nice V2. Here is day one, day two, day three. Day two washes out day one, day three closes above day one. So I entered the second half of the position here. Ever since then, it's been moving up nicely, hit 3 profit targets here, 2 profit targets here, I think 2 profit targets there. And then today, hit one up here, which I was really glad that I did when we were down here. But we've had a big move back up. We've had quite a recovery, but I did exit about 11% of my position here at higher prices. So I am grateful for that, but this is a mechanical trade going forward. So as I'm either going to phase out and run out of shares to the upside, or I'm going to have to wait all the way until the 10 crosses back below the 50. And, I like to have a variety of trading approaches. Majority of my trading approaches are discretionary where I can make decisions. But I like to have mechanical trades as well in case we just get a huge move, and huge extended moves don't work out that well for discretionary traders because you might be going up and then you get a couple days sell off that may get you out of the trade and then it may resume and you'll never have an opportunity to enter back in. So just to smooth things out, that's why I do like to have some mechanical trades just in case that happens. Of course, if it goes down, you're like, why was I in this? But, you have to play the long game on this. And I would have gotten out of my discretionary trades, but I do like to have a few mechanical trades around. So anyway, did hit one profit target up here. I am very grateful for that. So moving forward, phase out as long as I have shares, or I will get out when the 10 crosses back below the 50. Oops. Okay, Honeywell. I did take this trade back on the 29th of July. I took it because we had a lower low. We had a rally. We came back down. We made a higher low. We had a nice V2, day one, day two, day three. Day two washes out day one. Day three closes above day one. Yesterday it was down slightly, and then today is the day. And so my stop was a close below the halfway of the washout bar. This is the day 2 washout bar, so it definitely looks like we're going to be closing under that today. So yeah, you know, it was a big hit. I mean, 1.13%. I mean, not that bad, but the bar sure looks a lot worse. But I definitely will be getting out of this unless by some miracle we can close back above 173.13. All right, PayPal. Well, I did buy PayPal yesterday on the 30th of July when we had this V1. Here's day 1, day 2 rejects day 1, closes above day 1. It also went under the 100-day moving average, closed back above the 100-day moving average, went below the 30. The third ATR channel, closed above the third ATR channel. So these were all good. Also had a nice triple screen formation, which means you take the monthly time frame and you can see it's definitely in an uptrend. Weekly time frame, the prices came into the value zone. So when the weeklies come into the value zone, if you were trading weeklies, you would look for some kind of move back up now that it's in the value zone. But then I dropped down to the smallest time frame for me, which is the daily, and then I had this nice trigger. So my stop on this is a close under the 100-day moving average, 110.86. Right now it's at 110.63. So it has a potential of hanging in there today. We don't know for sure. I'm just going to have to wait and watch. But if we're wrong small. If we were right, you know, we have some nice upward movement, and that's the key with trading. Always position yourself with a small risk, a theoretical small risk, and a theoretical larger win opportunity, right? You don't know what's going to happen, but you have to at least take a look at it and kind of pencil the numbers in your head and say, okay, if I'm wrong, am I wrong this much? If I'm right this much. So always important. It's always important to look for risk to rewards. So this one, you know, this one might be a photo finish. Who knows? We'll have to see. Excuse me. Look at this, everybody. This is wild. All right. So, I do buy the SPY each day at the close, and I sell it the very first thing the next morning. And so why do I do that? Well, this is, in case we have some new viewers, I base this on a study that was done from Liz Ann Saunders at Bespoke Invest. There's 2 ways you can go about this. One, you can do the opposite of what I do. You can buy the SPY first thing in the morning and then sell it right at the close. That is one option. But if you would have bought in the morning, sold at the close, since 1993, using this approach, you would have actually lost 13.9%. Not too good, right, from 1993. But if you do the opposite, what I do is I buy the SPY at the close each day, and then I sell it first thing in the morning. And if you do this approach since 1993, this had a 634.2% return. So buy in the morning, sell in the afternoon since 1993, negative 13.9. Buy in the afternoon, sell in the morning, the complete opposite from 1993, 634.2%. And you can see the chart here. The blue line is the buy in the afternoon, sell in the morning. You can see this is done very, very well. The opposite is buying in the morning, selling at the close. This is the orange line, and it's negative. So what this really goes to show you, everybody, is that all the price move in the S&P 500 since 1993 has come in the after hours and the pre-market session. So you can see it's definitely an edge. Well, it has been an edge from January 93 till now. And so, you know, I don't know for sure, but I would imagine that edge is going to continue. And so that is why I buy this each day at the close, sell it first thing in the morning. It does have drawdowns, everybody. You have to keep this in mind. Long term, it works, but there's a lot of great trading system. Long term, they work, but in the short term, you have ups and downs. That's just part of trading, right? That's just part of the randomness of trading, but it's clear that it has an edge. So with that said, we did buy it yesterday at 300.72, And I'm very, very thankful we sold it for a profit today at 300.98. Wasn't a huge profit, but considering what we missed out on, I'm very grateful for that. So again, rinse and repeat. I will be buying this today at the end of the day. All right, UNH. So UNH, I did buy back on the 26th of July. I bought it because the previous day we closed under the 200 day and then closed above the 200 day. We also had a V1. Here's day one. Day two washes out day one, then closes above the 200. So in this case, I had two technical setups: a close below the 200, close back above the 200. And we also had a V1, and you can also say you reject the third ATR, the first ATR channel, and the 50 moving average. So it held steady for us for a couple days. I almost hit one profit target today, not quite. That's always frustrating when you get within pennies of your profit target and you don't hit it. And then we've had a big reversal. So today, if we close below the 200-day moving average, I will go ahead, just get out of this trade. That's the plan. Enter, stay in as long as it's the 200 and phase out. Exit if we close below the 200-day. This 200-day should have held as some support. There should be enough buyers in here to keep this above. But if there's not, that's a bad sign. So again, this one's going to be fairly close. And I guess PayPal will be fairly close too. So we've got to watch these at the end of the day. Look at this, everybody. This was my saving grace today. I did buy VIX back here on the 25th of July. And the reason I bought it, multiple reasons. But start with the V2. We have a day one. We have a day two. Day two washes out day one. Day three closes above day one. So that is a V2. Secondly, the previous day we closed below the third ATR channel. Next day when I bought it, we closed above. We closed under the 30 RSI. Next day, when it closed above. In addition to that, we had a double bottom with a bullish divergence. Here's the first bottom. Here are the readings of the MACD bars. You can see this shows strong momentum to the downside. We rally, we come back down, and the momentum, even though we're lower, was not as strong as the previous low. So taking this all into consideration, that is why I bought the SPY back on the 29th. Immediately went against me, rallied a little bit. Some volume came in yesterday. You can see today I hit 5 profit targets. I'm not even sure I've ever done that before. But thank goodness. And thank goodness, I mean, look, I got some right here at the top, but this was up 5% earlier in the day. So I'm very glad that I phased out where I did. Now, it's a 43.58 RSI. It did reject the 50 RSI, which I do not like. So if this closes under, if it closes under the 50 RSI, which is 23.85, I am considering taking this trade off. Let's take a look real quick at the actual VIX futures. So that's the VIX, the actual futures. We still have not had a 1030 crossover. That's actually bullish if that happens. I mean, we went a long way today and getting close to there. But you know, I'm out of a huge amount of the position right now. I'm out of about 60% of the position as it is right this second. So odds are I'm probably going to go ahead and just lock in this profit on this gain. This was a really nice gain. and so grateful that I got some right near the top. So boy, am I glad that I had the VIX today. made a huge difference. Steve says, hey bud, good to see you, Steve Burns. Thank you for coming, my friend. It's always an honor to have you here. Steve says, big volatility expansion. The expected rate cut was sold into. Yeah, that's exactly how it played out. It was baked in the cake. If we would have had a 50-point cut, we probably would have gone up. But Steve says, uncertain fear is creeping back into the market. Yes, it is. It shows up in the VIX right here. Steve says it is great not to only diversify your watch list, but also diversify your trading signals and systems to smooth the equity curve through different type of market environments. Yeah, you're right, Steve. That's why I do it. I mean, I do sell some puts, premium on puts. I have some discretionary, but I like having mechanicals just in case you have a runaway trend that is a discretionary trader you probably could not hold through. And like you said, it does diversify the equity curve. Just like you want to be diversified in your holdings, you don't want to have too much tech or you don't want to have too much particular industry. I also like to diversify my approaches. Hey, Andy's here. Good to see you, bud. Thanks for coming. Mount Doji says, I had some TVIX and it surged up 11%. TVIX, which one's that? Does that mean triple? That's not right. Oh, the Credit Suisse one. All right. Good job, Mount Doji. Nice. It always helps when you have a little offsetting position on a day like this today. Yep. Great trade, Mount Doji. Wow, thanks at Steve Burns, means a lot. The VIX expansion has been a long time coming. Yes, it has. It really has. And, I've battled with the VIX over the couple weeks. I had 2 losing trades on the VIX. I got in here, had to get out here. So this trade just kind of makes up for the previous trade, but that's okay. But I guess the key point I want to take is when I see a good signal come up, and, over all the years that I've traded, I've noticed the pattern is that if you're trading one particular stock, you get a good setup and it fails, then you get another good setup and it fails. Like the last thing you want to do is, be a sucker and say, okay, well, I'm going to try it again. But I have found just in my own personal experience that, that's the one that's probably going to go. So I didn't want to take this trade. I had to take my, my punishment with the last 2 trades that I have, and I did not want to take the trade. But just like I mentioned why I bought this, there were so many signals, and anyway, suffice it to say, I'm glad that I bought it. Greg, that VIX trade was fast and furious. That might be your fastest big win this year. It was so fast. It was so fast. I mean, I heard my computer going off with sell signals with my profit targets being hit, and then I heard it, and then I heard it again. I was like, did I just hear 2, or am I going crazy? Yeah, it was unbelievable. It was unbelievable. But yeah, I'm definitely considering taking this off at the end of the day. I mean, 1, 2, 3, 4, 5, 60, and I think I hit 1 yesterday. Yeah, I think I've only got about 35% of the trade. Yeah, that's a tough one. That's a tough one. But it did reject the 50, so anyway, that's that. All right. And here is Intel. You remember I didn't take this trade in this account, but you remember the other day I really said, oh man, this looks really shorty here to me. Yeah, I guess I should have taken the trade in this account. All right. So listen, before we get started, I do want to do a little bit on trader psychology. Trader psychology is the most important part in my book as far as whether or not you're going to be a profitable long-term trader. buying and selling, hitting the buy button and the sell button on your computer is very easy. It does not take any skill whatsoever. The real skill is in your head and how, when you hit the buy button, when you hit the sell button, or if you don't hit it, also that can be a problem too as well. So this is from our good friend Thomas Payne at Trader T Payne on Twitter. He has a great Twitter channel. He talks about trading psychology every day. So I really would suggest that you guys go over to this channel at Trader T Payne on Twitter and subscribe and just read it. Reading these things every day will make a difference. And you have to wonder to yourself, if you're a new trader, why are so many people concentrating and spending so much time talking about trader psychology? Why are professional traders, people that have been in the market a long time, talking about trader psychology, and the rest of the pack talking about just signals? Signals are important, don't get me wrong, we obviously look at them, but you guys, you being a successful trader or not being a successful trader comes down to trader psychology. So I know I beat you guys over the head every day with this, but I do it with love because it is important. So Thomas said, we all trade the same stocks using the same tools while looking at the same charts. All of the appropriate rules and strategies are very well-known information. Everyone can read the books. The difference is how we process and apply it. That part is in your head. It's so true. No one has a special secret agent chart, right? We all see the same stuff. And some people make money and some people don't make money. And so what's the difference? The difference is the psychology and your process, sticking with your process. Having just read Trading in the Zone by Mark Douglas, it really solidified in my mind that the more emotion you have for a trade, the worse you're going to manage it. It's simple as that. The ideal mind state is have no emotion, right? Because the less emotion you have, the better you're going to trade, the more you're going to stick to your process. If you guys had one share of a stock, you guys would trade it perfectly. I have no doubt. But you add on more shares and more shares, you start getting more emotions, and the emotions are the enemy to you going through and adhering to your process. So how do you keep the emotions out? Well, to me, the most important way is to position size small. Don't put on too large of a position. The second you put on a double or a triple position, there's emotion and energy associated with that. And you see the market go down. Oh, I got to get out. Or it goes up and maybe I'll buy some more, right? So it's all about process. Tomorrow is August 1st. I really want to challenge you guys and suggest to you guys, take the month of August, trade perfect for a month. Just do it. Just take your 5% position size or your 10% position size, follow all of your rules, and get in the habit. It takes about 30 days to create a habit. We're right here, August 31st. Just make a commitment to yourself and say, I'm not going to make impulsive trades. I'm going to position size correctly. I'm going to adhere to my stops. I'm going to adhere to my profit targets. I'm just not going to let emotion take over. And, do that for a month. At the end of the month, that's going to be your new habit. And you're trying to go back to your old ways is going to feel really strange and really bad. So anyway, I want to just challenge you guys with that. And, if you take the challenge, please let me know how it's going. And so just one more time, we all trade the same stocks using the same tools while looking at the same charts. All of the appropriate rules and strategies are very well-known information. Everybody can read the books. The difference is how we process and apply it. So anyway, I hope that helps, and let's make July process July. No, August, sorry. Let's make August process and follow your rules August. So anyway, I hope that helps. Okay. All right, where are we in this lovely market? So the Dow's down 250. All right. Well, let's get to it. Apple. All right. Well, Apple had great earnings, really went up this morning, sold off. Boy, at one point it was back down here. I was like, wow. I was actually thinking maybe I might take a look at buying that with that such low. But anyway, I can't do that. It's at a 69.94 RSI. So it's just too wild and crazy. Hey, Murat, good seeing you. Thanks for coming. Say hello to the doggy, too. So Apple is just too volatile here after earnings. Silver. Silver is down. Wow, it's down 3.37% today. You know, in order for me to get interested in silver again, I have to have a 5 cross below the 20 and back over, or a move back down here, some kind of V1, V2. We did take a live trade back on the 10th of July when we had the 520 EMA cross. I took this as a mechanical robot trade, and you can say this was a great trade. I scaled out all the way to here. I ran out of shares here. Advanced Micro Devices down a mere 9% today after earnings. Keep in mind this can happen with earnings, guys. So nothing on Advanced Micro Devices here. We're at a 41 RSI. If we got down here to the 100-day moving average and had a confluence of the 30 RSI, that would be a very interesting location to buy a deep dip here. But nothing on AMD today. Amazon. Boy, this is a tough one. This is a tough one. It looks like it's lost the 50. It did reject the 100-day moving average also today. And where did it get to intraday? God, it got to a 32 RSI. Let's take a look at this on the weekly. On the weekly, it has bounced off of the 20-day moving average. It is below the third ATR channel. You know, you could make a case here because it rejected the 100-day, you know, buying this over the 100-day with a close, with your stop, with the close under. On the other hand, you have the third ATR channel right above you. I don't necessarily like that. I'm just gonna mark this and we'll see where it closes. I mean, I could be talked into buying this here for sure, with the close under the 100-day moving average, but let's see if we can see something better. Boeing, big V1 to the downside. I would like, you know, I talked yesterday about we had this V1, but I didn't want to buy it because we had the low of the previous range, which would act as resistance, and it did try to get up in the old range and then back below. So I would probably looking for, you know, like a 30 RSI dip on Boeing. Alibaba sold off strong with everything else. Is forming the potential for a possible V2 tomorrow. Here's day one. Day two is definitely washing out day one. It would be a V1 if we closed up here, but if tomorrow we close back above here and it was still within the channel, I might take that. I'll just mark that in case it. Caterpillar, really nothing there today. I'm just amazed by these. I'm amazed by this move. Anyway, we were waiting for it to come into the channel, and it went into the channel and it ran right past the channel. So there's a lot of volatility today. There certainly could be more volatility tomorrow. Whenever you have these big bars, it stirs things up. It stirs people's emotions up, right? And that's why you get a lot of volatility. Volatility is just emotions and people. Nothing here. I want a more calm approach like we had back here when we closed under the 200-day. We closed back over the 200-day. My stop was just simply a close below the 200. This was a mechanical trade. Or if it was, as we were fortunate enough in this trade, it just moved up, and we scaled out all the way up to here. Walt Disney, we are back in the value zone. This bar is larger than 1 ATR. I would just like to see this move sideways and look for a V1, V2. Etsy definitely reversed off of its bottom in the value zone. We came from a higher high. We have earnings though, so there's nothing we can do. This was a nice real trade that we had back on the 18th. We had this V2, day 1, day 2, day 3, day 2 washed out. Day 3 closed above, closed into the value, closed over all the moving averages. And we all, let's see, yeah, we scaled out all the way up to here, a little there, and then I did not like how we rejected that previous high, so we exited there. But that was a nice trade. But the reason I show you these trades, guys, because most of these come in the value zone, and you can see you can get some good movement. The best movement comes from the middle of the value zone up to the 3, or the middle of the value zone down to the -3. That's why I don't like taking trades this high, because you're pulling the rubber band pretty tight. So that's why, I like to reiterate to you that we buy these in the value zone and you can get some good moves. Ford Motor Company looks like it's going to lose the 100 today. It's setting itself up for a possible V2 tomorrow back over the 200, but not right now. Facebook, glad I didn't take Facebook yesterday. I was going to off of this V1, but we took PayPal instead. But PayPal was no deal either because it did go down today. But anyway, nothing on that. Five Below bucking the trend today. But nothing there. Gold had a bearish engulfing candle to the downside. We are back down into value. It's too big of a bar, but if we can stabilize here for a couple days and get a V1, V2, that would be interesting. I've been waiting for gold to get back in the value zone. This was another trade we took, again, in the value zone with the 520 EMA, 520 EMA cross. Also took out a fractal, so we had 3 setups here. We had the 520 cross, we took out a fractal, closed above the 50, and this was a great trade, and we wrote it and scaled out up to here. Google had big earnings. This is one of the ones that did gap up. This is forming, I mean, it's well off of its lows, but it's just too high for me to buy up here. Goldman Sachs, boy, Goldman Sachs is really holding up well, isn't it? That's surprising. It's down 15 cents on a day like today. That's unbelievable. But nothing there. Nothing there. I need it to pull back into the value zone, maybe V1, V2. We had a nice trade here. This one is one that I took over the value zone, but the reason I did is, again, I had a couple signals. I had to close under the 200, close back over the 200, triggered that fractal. I don't like taking it this high, but on the bright side, my risk would have been very small and my reward great, and this was a great 3.1 or 3.2 trade. We phased out and then we lost the 70 here, got out. IBB, pretty strong today considering did reject the 200-day moving average. I'm going to be looking to buy IBB on a mechanical crossover trade when the 5 crosses back over the 30. So we're getting close, right? And this will be a mechanical robot trade, but nothing today. Intel, boy, if there was ever a short signal, see this, this big reversal bar on huge volume. We went over the 30, under the 30, I'm sorry, over the 70, under the 70, over the 30 ATR channel, under the 30 ATR channel. Next day we had an attempted rally, but could not get over the 3rd ATR channel. The rally was on lower volume, but anyway, one that got away, but that would have been a good short. IWM, of course, we talked about that already. We bought that with the moving average crossover, the 1050, and then we added another position here with the V2. Lucky to hit one profit target there today. Johnson & Johnson, Nothing here, but I'm looking now for a higher low V2 back in the channel. The people that bought here, they kept it as long as it was going up. There was some selling pressure, that selling pressure, and then plus today we had more. But if we are now strong enough to go back up and form a V2, so we could form a V2 tomorrow, day one, day two washes out day one. If we could form and close up here tomorrow with the V2 back in the channel, I would definitely buy that. Coca-Cola, waiting for it to in the value zone. Well, it is there, but it's a big bar, so it needs to settle down. The waters need to settle down, and then we can look for some kind of entry. Again, it's in the value zone, so we may have a run back up here, but we need a trigger. Lockheed Martin. Nothing on Lockheed Martin. We are in the value zone, but we have too large of a bar. So that's going to have to settle down. You know, maybe a close under, close over the 50 might be interesting. Here's another good example of a move up, a pullback into value, a nice V1 inside the value zone. And this was a great trade. We rode it all the way right up to about here. MasterCard down for 2 days in a row. Huge bar, closing about 50%. That does not surprise me. Bounced right off the 50. That would have been a good intraday buy down there at the 50 if you do trade intraday. I didn't even catch it, but I wasn't going to get involved when the market was moving that quickly. So nothing today. We'll just have to wait and see what happens. Here is an example of another move up, move into the value zone. Beautiful V2. Next day went right our way. Got out of about 50%. Then we had to get out when this dumped, but that's okay. But we still locked in about 50%. I was looking for another entry here, but it never came, unfortunately. But sometimes that happens. Merck is up today. That's very strong that it's up on a day like today. MACD went positive. We had a crossover. You know, it's not great price action here, everybody, but I do like that it moved up above and then came back down, tested the previous resistance, which is now support. MACD going positive. I actually kind of do like this trade. This probably surprises you because it's not kind of our normal type of trade, but I like the relative strength of the trade today compared to the rest of the market. So let me just make sure I'm doing those numbers right. Yeah. So this one is interesting today. Mainly, I mean, we had a 520 cross. It looks like we have a 1050 cross, and I do like that we broke above here, and we have tested it twice, and MACD went positive. We're at 50. We're inside the value zone. You know, a little different than most of my trades, but I am going to mark that one for today. Oh my gosh, look at Microsoft, everybody. Nothing on Microsoft. Netflix. We talked about this yesterday. JT and I were talking about this. Did trigger a V1 intraday. Here's day one, day two, but it looks like at this moment it's untriggering. So I will be looking for possibly a V2 tomorrow. We could still have a V2 tomorrow or a break back above the 200. Nike. Nothing on Nike. Philip Morris back in the value zone. Well, PayPal, we're going to have to watch that at the end there because it's very close to our line in the sand here. And jeez, I look at each chart. I don't know why I'm surprised, but whoa, this is massive, massive. Nothing there, nothing on the Qs. Snapchat is up 2 cents, good relative strength, but too high. S&P going to be buying that at the end of the day. Thank God we sold it at the open. My goodness. Square is actually up today in the value zone, but nothing on Square. You know, guys, I like to show you guys this trade because this is probably the picture perfect trade when you have so many different indicators lining up. But let's just go through them real quick. Here we have a low, we have a rally, we make a lower low. MACD is very deep here, showing that the momentum is very strong here. The second leg down, even though we go lower, MACD is not, the momentum is not strong. It's running out of momentum. On top of that, we have a V2 entry. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1, also closes back into the value zone. This was a false break to the downside, a quick false break to the downside. The best downside breakouts are the ones that just pop down right back up, and that's exactly what happened. So we did take this trade. We had about a 14% move on that trade, but nothing there today. Pro shares, again, just too much to deal with here, too much emotion in this bar. Bonds went skyrocketing up on the rate cut. Look at this volume. Did take out a fractal here, but it's just too high for me to buy up here over the 1 ATR channel. Tesla. Strong today. See how we had earnings here and then we came down all the way down to here. See this move? You know how we talk about 50% of one bar? Well, here's 50% of the move. We're right back to about 50% of that move, which is a Fibonacci point. So I'm not going to do anything here. I'm just pointing out this, you know, from a shorting standpoint, this is where I would look to get interested. Twitter up 3% today on a day like today. Unbelievable. But nothing on Twitter. UNG, look at UNG, 5% move up. My gosh. Rejected, it looks like it rejected the 50 RSI, so nothing there. UNH we're going to have to get out of this with a close under the 200-day moving average. Call that a small loss. It's unfortunate, but that's how it goes. Oil gapped up, reversed, is holding the 200-day, is holding the 50 RSI, and MACD went positive. Yeah, I don't think I'm going to buy oil here. I mean, you could with just a close back below the 200 for sure. See how we're painting a triangle, which means the previous day we had a high. We went up and reversed, which is negative. But if the next day we can go back above yesterday's high and turn a negative into a positive, then it switches the momentum back to a positive side. But nothing on oil. The dollar. Look at the dollar, everybody. Unbelievable. Unbelievable the strength of this. We're getting up close to a 6 ATR channel. Doesn't mean I'm just gonna go ahead and short it up there, but we'll see if the rubber band gets pulled too tight up here and it finds some resistance. How's my VIX doing? Well, we rejected that previous high. I'll just have to see at the end of the day what I want to do with this. I mean, it did reject the 50 RSI. It looks like it's going to, right here, it's closing halfway above the halfway mark. That's a tough one. Verizon, big day down, lost to 200. It did bounce off the 250, has earnings, so there's nothing we can do there. Walmart. You remember, guys, when I was talking about it coming back down into the value zone, moving sidewards, and I really like that, but the only thing I was missing was a V1 or a V2. Good thing we waited, right? Good thing we waited. Here was a move, but it wasn't a V1 or a V2, so I'm just glad and thankful that I did not get into this trade based upon that. We could have a V2 tomorrow, right? Here's day one. Day two certainly washes out day one. If we had a close back above here, I would buy it, but nothing today. Energy Select, we talked about that yesterday, having a V2, rejecting the 50. It had rejected the 20-day moving average, so I didn't buy it. Did have some room, but it rejected the 200. We bought the same thing over here, so we didn't buy this one, but we did buy this one when we had the V1, I mean the V2, day one, day two, day three, day two, washes out day one, day three, closes above day one. And we had a nice trade. I mean, we scaled out, scaled out, scaled out, and I got out here when we rejected the 200, but we had a better risk to reward ratio. We had more upside on this trade than we did having to buy here. XLF is holding up pretty well, considering it's in the value zone, nothing there. Real estate had a good move up, rejected the 1 ATR channel, so nothing there. Utilities, interesting. I would have thought these would have gone up, but they did not. Possible V2 tomorrow, although this bar is larger than 1 ATR. Healthcare. Look, we could have a nice V2 tomorrow, right? Here is day one, day two. Tomorrow, if we close back above day one's close here, we would close back in the channel. That would be excellent, but nothing there today. And pharmaceuticals, nothing really there. So my only potential here is on Merck, and the way it's looking now, it's looking less and less likely. But the reason I'm considering again is we have the 520 EMA cross. We did take out a fractal yesterday. MACD is positive. We are in the value zone, and the relative strength of the day is pretty strong. It's up on a day like today. So let's look at the weekly. So I mean, weekly we're in the value zone. We were up against this big bar, which is not good. We rejected the first ATR channel. We do have a lot of support below this. Yeah, I think I'm going to buy Merck. I think I'm going to buy it. This is not an impulsive trade, everybody. It's just, everything considering, holding the support, crossovers, moving MACD crossover above 50 in the relative strength of the day, I do like. So we have 5 minutes. All right, so this is going to be a normal position size, a regular position size. And I'm just going to put a market on close order in there. Okay. All right. And that was it. That was the only thing that looked decent today. So now we got to get the big can of Roundup out of our bag and get rid of these positions that triggered our stop. So Honeywell, yes, going to be getting out of that at the end of the day. IWM is the moving average crossover, so that is fine. That is not a discretionary trade. PayPal does look like it's going to close under. Going to have to go ahead and take the loss on that. SPY, we will be buying down in this range today. Much better than up here, right? I'm so glad we made a profit on that today. And UNH is just definitely horrible. So UNH is going to be closing below. So I'm going to have to sell that at the close.
Order cancelled.
All right. That one won't let us do a market on close order. So I'm just going to go ahead and get rid of that right now.
Order filled. Order partially filled. Order filled.
All right. So Honeywell is going to sell. IWM we're keeping. PayPal we are going to sell. SPY we are going to buy at the end of the day. Merck we're going to buy at the end of the day. So let me just make sure I'm out of everything. Okay. I'm going to hold the VIX. I'm going to hold the VIX because it's holding halfway to this bar, and also because I phased out of so much today. There's definitely going to be some, let's see. Yeah, we're down to 326. My goodness. Who knows? That might close over the 50 anyway. Yeah, I am going to hold that, and I am going to buy Merck at the end of the day. The only other one we were looking at was Amazon. I think I'm going to hold off. I think I'm going to hold off on Amazon. So we have 1 minute. I think there's a chance. I think there's a chance that we could get this. I think there's a chance this could go under 30 and then back over 30. That might be a better risk reward. All right, so that's it. We're getting out of Honeywell. We're getting out of PayPal. I got out of UNH already. What do we have? We have 10 seconds. So Honeywell is closing under. Yes. PayPal is closing under. Yes. UNH is closing under.
Order
yes.
filled. Order cancelled.
All right. So I did keep the remaining 35% of VIX. Thank goodness I had this VIX trade today, though. This really mitigated a lot of the losses in a big, big way. And then you know, I had my order in to buy Merck, and I don't see it. I don't think it took. Maybe there's a delay because I'm looking here. Market on close, buy. Maybe it will take a second. Anyway, what a day, guys. What a day.
Order cancelled.
Dow Jones is down 335 points. What a day. What a day. How'd everybody else do today? Anybody have any stories? Max says, would be quite crazy a market-wide washout if we got back above 3,000 and stayed above. Yes, it would. It would. Who knows what's going to happen? I think volatility is going to be here for a little bit, Max, on a day like today. Because, you know, we have a big day like today. This jumbles up everybody's emotions. When things are just going up and up and up, people's emotions stay pretty calm. But this is like getting punched in the face. All of a sudden, you know, you see red and you're mad. People are doing all sorts of crazy things because, you know, the market is now emotionally charged, and that's when you have to really be careful. Mount Doji said, Merck had a good day, but dipped with everything else after the Fed.
Order filled.
There's my Merck. I don't know why. So 82.99 on Merck is what it says. Sometimes those market on order ones, it takes a second until you get them. 82.99. Yeah, right there, it's close. So that's the new position. All right, we shall see how that works out. Now the question is, what is going to be my stop on this? My stop will be if we lose these moving averages and we lose the 30 RSI, the 50 RSI. So anyway, we'll see. We'll see what happens with Merck. So we did get out of Honeywell underneath the stop. So Honeywell is gone. That was a loss. PayPal underneath. That was a loss. UNH, that was a loss. Those are all gone.
Order canceled.
VIX closed strongly. Did enter Merck today at 82.99. So that is that. So listen, if you guys have any questions, please let me know. Just please type them into the chat. Don't be shy. I'm very happy to explain or clarify anything I went over today. And if you want me to take a look at anything, I'm certainly happy to do that. But before we get to the answer section, I just want to put in my quick daily plug and let everybody know that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. I really do like to teach. I've had great success with my clients. We have fun here on the live stream and we do ask questions, but honestly, when you get down to it, one-on-one, in person or over Skype, is more helpful because there's quick back and forth. And the main difference is I ask you questions after I teach you and I make you teach it back to me, which I feel like is very, very important. Because, I've dealt with people for a long time just here and there, and I feel like they know what I'm trying to explain to them. But if I have them explain it back to me, they can't. So I know they really don't know it. And that's probably the biggest advantage of having one-on-one lessons with me. And so it just starts with a free phone call. I just want to know about you, about your trading, about your challenges, what your goals are. And then I'll take all of that and I'll customize the lesson plan for you based upon what you tell me. So, if you've been thinking about it, please reach out. My email is in the description of this video, and then also my hourly rates. And then you can also reach out to me on Twitter. And then lastly, if you can, I ask this every day, but if you could hit the thumbs up button, I would appreciate it. It helps get the channel out to more people on YouTube. And Lord knows there's a lot of people out there that need help with their trading. I get emails all the time from people letting me know, hey, thank you for the channel. I'm really looking at the market differently now. I've actually started to make money. So I want to help as many people as I possibly can do that. And so help me help them, and just hit the thumbs up button or share it on social media or tell your trading friends about it. So, okay, there's my plug. Enough of that. So let's see. Frank, hey buddy. Nice to see you, Frank. EL, nice pullback, Greg. Let's see. Woo. I'd say, Frank, when I look at this, I do look at it as a pullback, obviously. I don't know how else you could look at it, but I also look at a lot of distribution and a lot of supply coming into the market. If it could settle down a little bit, I think the 50 is probably the magnet that's going to pull it down there. Who knows? I don't know. But, if you really wanted to buy Estee Lauder, I'd like to see it at least test that 50, see if there's some buyers there. Wow. Steve Burns says, all I had was Amazon, and now I am all cash, no damage, and came out of June with my profits this month. Nice. Nice job, Steve. Yeah, I know Steve had the Amazon trade a couple days ago, so you got clipped a little bit there, but not too bad, not considering some of the huge trades you had in silver and Etsy and other trades like that. So yeah, I mean July, I'm happy to say July was a profitable trade, profitable month for me. It was kind of a tough trading market. It was kind of sideways movement. I mean, June was great, right? June was really great. And, but I'm grateful that July was a profitable month. Always grateful when that happens, but it's a nice position to be in, Steve, isn't it? To be in cash. Of course, you're on the lookout like, oh man, is it going to move? Am I not going to be in it? But that's FOMO, right? I mean, Steve is in cash because he didn't have any signals, and he followed his trade on Amazon, and his plan was to get out with the close under the 50-day moving average, and that's what he did. So he can sleep well tonight, and maybe buy a big dip. Who knows? Thanks for coming by, Steve. I appreciate it, my friends. Always seriously an honor to have you. I mean, if you guys don't know Steve Burns, he's a famous author, trader, mentor, and teacher. He has the best Twitter channel ever at @sjoseph_burns on Twitter. Go to his channel and subscribe. Read everything on there. It will make you a better trader. But it's just really great to have you here. And I know everyone else is excited to have you here too. Be able to ask you questions, and for me to ask you questions too. It'd be interesting. Mount Doji had a great day. The Fed day we had been waiting for. Were you positive today, Mount Doji? William, hey Greg, if take a trigger entry using a fractal break, would you use the same fractal line as your stops or a moving average below you, like V1, V2, you would use halfway of the washout bar? Do you have a particular example, William? I mean, I understand what you're asking. I think it'd be easier to show you graphically. Let's see. If you take a trigger entry using a fractal break, would you use the fractal line as your stop? No, I would not, because sometimes when you get a fractal break, let's see, what did we take that was a fractal break? Let's see. Gold was a fractal break. Unfortunately, gold moved so much it was difficult to. It skews the. All right, I hope you can see this, William. But here was a fractal, a high with two lower highs to the left, two lower highs to the right. This was the day that we triggered the fractal, and it just happened to be the same day we triggered the 520 EMA cross. So what William's asking is if here's the fractal, this little dotted line here. I know you guys can't see this, and I apologize. It's just that the chart is so skewed. But it did trigger the fractal, and it just happens to line up if you can see this dotted line. So William's asking, if you took the fractal, then it closed underneath the fractal, would that be the stop? No, it wouldn't, because it's too tight. It's too tight in this particular case. I would use the 20-day moving average or the 20 crossing back below the 5 crossing back below the 50. But I know what William's asking, but no, I would not. I would use that as your entry, but I would use some kind of moving average below me as my actual stop to take me out to the downside. But the fractal was the entry. Maybe on USO. Oh, like this fractal here. Okay, so good example. So what William's saying is if you entered the fractal here, would you basically exit if you just close back into the range or underneath the fractal? No, I'm going to stand by what I said. I would use the fractal as the entry, but I would use an upward sloping moving average below to take me out. And one that's not too close, because if it's too close, then it can just be noise, right? If this were me, I'd probably use the 10-day. So if I used this fractal entry that I entered here, triggered the fractal there, I would probably use the 10-day as my moving, as my trailing stop or my initial stop. And then of course, if it moved higher, I would tighten it up with a faster moving average. William says, pretend the 200 isn't there. Yeah, let's just pretend the 200's not there. But yeah, I would still use a moving average below me in conjunction maybe with the RSI as well, because if it lost the 10, it's probably going to lose the 50. But if it just poked its head back inside under where the fractal, I wouldn't use that as my stop. Like V1s, you would use halfway the washout bar. Yeah, it's a little different. Because you're not really washing anything out when you're creating that fractal. Max says, what's your process of taking profit targets? Do you have alert stop limits? So Max, let me see if I can find this for you. In the description of this video, Max, there is 4 links to 4 of my lessons on YouTube. And one lesson is on taking profits. Another lesson is on my different trade setups. Another lesson is on the indicators that I use. And I can't remember the other one now. But I'm posting the link right now into the chat. That is the link to the lessons that I have on taking profits. And again, it's in the description of this video. There's 4 links there, 4 lessons. You should really watch all of them. I mean, if you like what we're doing in this channel, I go through each one step by step, whether it's taking profits, how to set up your indicators, my different approaches, and I'm trying to think what my other one was. Now it's bugging me. Let me get this so I have it. Let's see. Okay, so the 4 lessons are my 7 different type of stock trade setups. What chart indicators do I use? That's a different one. Oh, how to use V1, V2 entries. That is another lesson that I have. And then the last one is phasing out. Yeah. So it's probably better that you watch that video, but let me give you kind of just a quick overview real quickly. I take profits each day whenever the price goes my direction in the amount of 0.45 ATRs. So, if an ATR was 1, like $1, 0.45, let's just say 0.45 was 0.45, I would get out when it moved 0.45 cents. So, and it changes every day. It's based upon the close. It's not like I have static profit targets. They move up and down all the time. And then I base how many shares I get out of based upon my profit targets. It's too long to go into now, so you should watch the video. But essentially, just as a rule of thumb, I place profit targets 0.45 from, like here on VIX. Tomorrow I'll place 3 or 4 profit targets. 0.45 equals 37 cents. So I'll put a profit target at 37 cents, and then above that another 37 cents, above that another 37 cents. And you can see I put 4 one, two, three, 5 profit targets of 37 cents above me yesterday from the close, and I hit those. So I'm not trying to pass the buck here. It's just that it's a bit complicated in the time we have. So, go watch that video, and then you can let me know, send me an email if you have any questions on it. We can work on it a little bit more. Mount Doji says, I really love IBB before the announcement happened. That doesn't sound good. Oh, the Fed announcement. Okay. Yeah. I was looking at that too, Mount Doji. I wasn't going to buy it over the 200 because we're coming from a lower low. What I'd really like to see now is, go up, come back down, then get a higher low back above. But as I mentioned earlier, what I'm really waiting for is when the 5 EMA crosses back over the 30 EMA. That's a good back-tested approach from ETFreplay.com that shows that that's a good, profitable, long-term approach. So that's what I'm waiting for as well. Mount Doji says, would love to hear your thoughts on Run. All right. Well, we did have this nice V2 yesterday, right? Here's day 1, day 2, almost triggered a V1, but it didn't. Then day 3 closes above day 1. This is a tough one because it did reject the -1 ATR channel, and it did close back in the channel. We did confirm a down red bar, which means this looked positive because it was a V1 to the upside, but then it immediately went down, and then that immediately went back up. Relative strength was pretty good. If you're in the trade, it's fine. But if I were not in the trade, you see how we painted the green triangle? This means yesterday's bar had a high. Today we went up and then reversed back down. This is essentially negative, right? It's a V1 to the downside. However, if you have a negative reaction and the next day it turns positive, that is good. So what is this? Yeah. So if this bar if this continues down tomorrow, it will not, this will disappear. However, tomorrow, if we go back up and close above that high, it's not bad, especially with this nice V2 behind it and the pretty good relative strength. So, would I have bought this at the end of the day? Probably not. Would I have bought it yesterday? Possibly. But I just have to see whether tomorrow we can overcome this negative bar. And if it does, then we might be able to run. Good to know. Thanks for clearing that up. I hope that helps, William. Max B, my bad for not finishing your videos first. Still watching B1, B2. Thank you. You're welcome. And Max, if you have any questions about any of those videos, just send me an email. It's no problem. I'm happy to get back to you and help to clarify. But I think after you watch the phasing out profit taking, I think it will make more sense. Mount Doji says, I just feel strong about energy. Do you? Let's see. Well, if you feel strongly about something, that's fine. But if you have an idea or a theory about something, that's good. But in my opinion, think about things, have theories, but then wait for some kind of price action before you actually get into the trade. William, what are those green triangles or indicators called? It is only available on Trade Navigator. William, this is something I have been using for years and years. I don't think Trade Navigator, I'm not even sure they still have them available. This was back when I studied with Larry Williams. They're called fake out bars. And I don't even know if Trade Navigator has them. However, I really don't need them to see them. All I have to look for is a V1 that fails, right? Like, and you know what V1s are. And this only came to me like a few weeks ago that these are just negative V1s. So here we have a high. See how we have a V1 to the downside? Well, this is negative and very likely it will continue down. However, if you have a V1, and it can't be a V2, it has to be a V1, but then the next day it goes back up. Here's the high, we wash it out, we come back down. That creates a V1 to the downside. But if you have a V1 to the downside that the next day goes right back up, that would make your triangle. Or if you have a V1 to the upside and it goes, that's bullish, and this one was bullish, but if you have a V1 to the upside that immediately fails the next day, that's bearish, and it would paint the triangle. I don't think Trade Navigator has them anymore, William. They could, you could call them, but I've never seen them anywhere else because I know Larry Williams did a deal with Trade Navigator and that was the only people that had it. Mount Doji says, I'd like to see CCI. Well, you know, we had this higher low close back above the 100-day moving average. That would have been, you know, a good risk to reward ratio. Don't know if it would have worked out, but it certainly worked out. But would I buy it here? I mean, MACD went positive. You know, we're above all the moving averages. We're still relatively tame on the RSI. You know, if I was going through charts without you asking me and looking at this one, I wouldn't stop and go, oh, I'm going to buy this. Because I feel like I would be chasing a little bit up here. I mean, it's still in the value zone, but, you know, like this move here, see the triangle? See what we have the high? Here we have a V1 to the downside. That looks negative, but the next day is able to go back above that high. You know, taking that intraday or something might have been interesting, but again, I don't like to take trades this high in the value zone because most likely this one ATR channel is where you're going to find some resistance, just like we did here, just like we did here today. Finally, Eli Lilly, told you I was ready to scoop up today. Let's see. Oh, ELY is not Eli Lilly. That's Callaway Golf. Did you buy Callaway Golf today, Mount Doji? It's a good V1, but again, the day one bar is larger than one ATR. William says, interesting, something to look into, but you're right, you don't need them to see the failed V1s. No, you don't. You don't. They're failed V1s. That's a good way to put them, William. I like CCI more yesterday. Yeah. Boy, what a day, huh? It was slightly red for me today, but I feel like I dodged a bullet with that VIX trade today. Otherwise, it would have been a pretty bad day. I mean, yesterday I hit a year high, which was nice for sure. But that VIX trade made up a lot. So, what do we have going forward here? So we're out of Honeywell. We're out of PayPal. We did buy SPY. Oh, let's see where we bought SPY at today. 297.43. Whew. I don't mind buying it there. We'll see what happens tomorrow. UNH was gone, so that was also a loser. But listen, we had some weeds in our garden and we got out of them quick, right? Nothing wrong with that. So we're still in IWM, hit that profit target. Merck, I did enter that at the end of the day because of the relative strength and holding the support, and the moving averages below it and the MACD positive. SPY, we bought 297.43, and the VIX, I did hold on to that mainly because I scaled out of so much today. And that is that. Mount Doji says, I didn't. I'm always forgetting about the large day one bars. Mount Doji is probably the most important part of a V1 and V2. The most important part is that large ranged first day, because that means that you have a lot of people selling into this. In order for it to move more than one ATR, you need an exorbitant, an excessive amount of buying or selling that's outside of the norm to drive a bar more than one ATR up or down. And if you have a bar with more than average selling pressure to the downside, you don't really want to get in front of that and try to go back up against it because it just happened to you. See what I'm saying? Just like if you had a big up bar, you wouldn't want to short into that up bar if the first day was larger than one ATR, because that means there was a lot of buying behind that bar. So it's hard. Why do you want to go short against something that was an abnormal amount of buying? And why do you want to go long when you're up against the bar that has an abnormal amount of selling? Does that make sense? All right. So Dr. Jorgensen is in town today. He hasn't been on the live stream for a couple days because he's been traveling, but I'm having dinner with him tonight. So I'm excited for that. 6:30, we're going to go out to dinner. We're going to catch up. He's doing a big trip. He's on his way to Pakistan, riding his motorcycle around Pakistan for a couple months. So I'm excited to see him, and I will give him everybody's best wishes. And so I'm going to get up in the mountains, go hiking. Thank you all for coming. I appreciate you being here. Appreciate you spending and investing your time with me. I hope it's helping. Go out and do something nice for somebody today. That's all I ask, because it will be good for them and it will be good for you. And again, if you guys have any other questions about anything I discussed today, you're not clear, or you didn't want to ask them in the live chat, or were embarrassed for some reason, which you don't have to be, you're always free to email me and I'll do my best to get back with you. So thanks for coming, everybody. I appreciate it. Mount Doji, thank you. William, nice seeing you. And by the way, I didn't get the name of your dog. Beautiful dog that you sent me that picture of. Max B, thank you for coming. Let me know if you have any questions about those videos that you watch. Steve Burns, thank you, my friend. Always nice to see you, and appreciate you coming by and hanging out with us. And Frank, nice seeing you. Thanks for coming back. Murat, hope you had a good walk with your dog, and thank you for coming by. And Murat, thank you for talking about trading in the zone a couple weeks ago or a week ago, because that got me back into reading it again and listening to it. And it is really helpful. So thank you for that. And Andy, good to see you, Andy. Thanks for coming. And JT, always good to see you, my friend. So you guys all have a good week. You all have a good day, and hopefully we will see you tomorrow, okay? Thanks, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.